Mr. Kothari, thank you so much for joining me. Firstly, before I come to where gold prices and demand are right now, that is in the third quarter of 2023, can you give us a general sense of how gold has been moving in the last year or so?
So this year, the US Fed rate interest rate is increasing almost 13 times. It's a 5.25 to 5.5%. It's more effect on the liquidity side. So initially, when the interest rate is increasing, slowly it's effect on the entire industries also. So you see the gold market is going down before the tension in the month of October. So when the prices fall to $1,825, that time the huge demand is India. Lots of people are buying, they book their goods. The 10 days period when the price fallen from 1900 to 1825, $100 in a week, that time lot of bookings should be there. And jewelry sale, booking, inventory, everyone is putting there in the stock. Now what happened? Everyone is a profit taking. Now the prices suddenly moved to the 63,000 approximately. So people are waiting for the price because when the prices move above 60,000, no, the people are waiting for the price. There is no buying everywhere. It's going to slow down. Or maybe in auspicious day, they buy from 10 grams to 5 grams. So it affects the liquidity side. Now in this week, the liquidity in the market is a very tight. If you see the sale, there is very less demand in the market. And market also come in the disparity, in the discount side. It's all depend on the price. But no doubt the festival season is there, so people are buying gold jewelry. But I see in every market it should be nervousness because of the liquidity crisis in the market. Now it's happened because when the interest rate hiking no everywhere in India also the 7.5 to 8%. So I think the whole industry slowly it's affected. And second affected of this the tension from Israel and Gaza all affect the sentiment of the market and the gold prices about 1825 to move in a 10 days to $2,000. So it's all effect on the market and the sentiment also should change.
Right. So, Mr. Kothari, so two things. I think so. One is, as you said, there are external factors like the Middle East tensions, US Treasury yield. The other is more specific to do with India. Now, if we look at other asset classes, stock markets are maybe a little steady to down right now, but real estate is seeing unprecedented bullishness. The general sense in terms of consumption, including in other goods and services, seems very high in India. So, is that playing a role at all or likely to play a role in gold? That's number one. Number two, as we enter the festive season, I mean, we are in the festive season, but let's say Diwali is still to come. Do you see any shifts which would influence the outcome of the total number for the year?
After the Diwali, the marriage season should be started. If prices in the comfortable zone, it's below 60,000 price, then I think the demand should be quite good, but not so higher, but quite good. Because what happened when the prices move higher, the people, instead of buying, they exchange their old jewelry into new jewelry and paying the making charges. So this trend is happen when the price is moving higher. So I think if prices is the comfortable zone, it's below the 60,000. In month of October, we have seen the 58,000, 58,500 price. If prices is comfortable and this war should sort out or anything happen, so then the prices should be down. But when the interest rate is increasing, it's effect after the 6 month or 9 month. It's not the effect day one. When the US interest rate is increasing, then India also the interest rate increasing by 200 basis point. So I think it's effect after 6 month or 9 month or in a year. But when the interest rate is increasing, market should slow down. Equity market, then precious metal, then after a real estate market is all affected in the slowly process.
Right, right. So you're saying for this season, are you projecting? Because I was looking at World Gold Council numbers, and obviously the last quarter was very strong one. But the question I think is, will India consume more gold than let's say last year, or move to a higher plane than before?
No, I think maybe it's 700 tons approximately in between 650 to 700 tons is the every year's India importing. I think this year's prices is a higher, uncertainty is there, and people are now slowly investing in a gold. Those people are from far away from the gold. They're now investing in the gold. Like if you see the ETF also increase in India, in ETF gold also increasing, gold and silver also. So investment demand is still there. I think when the equity market is on the downside, maybe gold demand should be there. 650 to 700, I think it crosses this year also.
Right. Though we saw about 774 tons last year. So that means you're saying it will be down compared to the previous year.
Yeah, because the higher prices is there and also the rupee depreciate also. It's both effect on the gold prices and the customs duty, including GST, it means almost 18%. So I think it's effect on the gold prices also because there is the two higher prices in India compared to the international market and everything.
Right. Since you mentioned it, and I must ask you this. So do you feel we need to be reduce import duties?
We have already requested the ministry that 18% difference between international and domestic market. It means 8 lakhs rupees difference between domestic and international market. So it's a huge difference we never see in the history of India. And ministry also knows the difference of a customs duty. And if you see the newspaper articles every day, the customs sees the goods in
Seizures.
yes. So I think government have to think about that because in India it's a huge manufacturing hub there. So slowly it's affect our industry also, domestic industry, handmade jewelry, machine made jewelry. It's all effect on the market.
Right. Right. Mr. Kothari, thank you so much for joining me.
Thank you. Thank you.